All right, good evening, everybody. It's the 8th of March, 2026. It's good to be back on stream. I'm TraderXO. The time is just after 9 p.m. UTC on a Sunday evening. Just give me a quick confirmation in the chat that you can hear me okay and that you can see my screen, please. And we'll kick off the stream very shortly once I get confirmation. Yeah, we'll have a look at ES and NQ. And potentially gold as well. All right, excellent. All right, good. Good to see some regular faces. All right, in today's session, look, we're just going to keep it short, sharp, and simple. As always, anything said in today's video is not going to be financial advice. It's just my view of the markets. I've had a relatively quiet Q1. I've not been overly actively trading. I've probably been more in the trenches of coding and software development. I think we're at this exciting time in AI, but it's certainly a fascinating time for the markets as well, given the geopolitical backdrop. I think in today's session, I was actually hoping to cover more order flow footprints, but I think what we'll do, because it's my first session back, we'll just take it nice and easy in terms of looking at markets objectively from a price action perspective. We'll have a look at some market profile as well for Bitcoin, but really a backdrop on looking at some of the bigger picture in terms of NQ and ES. Now, what we'll do, we'll just kick off with the chart straight away. If in all honesty, when I look at the markets here in terms of Bitcoin, can you all see my screen okay? Just want to make sure everything's coming through fine. It's been a while since I've streamed publicly. If there is any technical issues, then I wouldn't worry about it too much. It's one of those things. But look, starting off, I think, in all honesty, one thing I will say is, one of my favorite indicators is something that I've been using now for quite some time, is the 1221 or 1225 weekly EMA. When you look at the context, it's evidently clear the current context that we're in. Okay, and so the one thing that I will say is that when we see price, okay, in terms of what the timeline or what the sentiment assumes to be, oh look, this is a breakout of the range, we're ready to go higher. It's never really as straightforward as that when the overall market context is to the downside, okay? And the second thing that you really have to think about is the time spent in consolidation here. Is this really a long enough period? Because if you look at what's happened in terms of price, we've had a drop, a base being built, and followed by another drop. So a part of me does believe that, are sellers becoming exhaustive? I think they are to some extent. I think there will be a mean reversion, possibly back up into 80, 81K. That's the key level that I've identified, that if we do trade up there in the next week or two, that's certainly going to be a level that I may consider selling if I get the trigger to sell that level. But nevertheless, looking at price action here, you can see that when the 12, 21, 25 weekly EMA, in this instance, I think I've got the 12 and the 25s up, okay? The pressure is to the downside. You go to the 3-day chart, it's no different. You can see what's being capped in price. So for me, in all honesty, the easy trade is often when the market is trending down, unless there's a sharp rally into the bands, followed by rejection. And the minute we start gliding through the bands, that's when you often see continuation lower down. The key thing to note here is that there's no real compression of the bands, where you can see the dispersion between the bands, there's a narrowing. This is short-lived, okay? At no point was this bullish on the 3-day. Even when you look at the weekly, it was just a mean reversion back into the bands. Just as it is on the way up, when you see price coming back into the bands, okay, if you want to see a true structural break, you need to see price trading through the levels with a rejection before you see continuation lower down. And so for me, when it comes to the long side, I really have to be selective in terms of, well, what are the levels that I want to long? And there's not really been a great deal setting up just yet for me. So looking at the weekly bands, like I said, when you look at the dispersion between the bands, this is on the 3-day. Again, another mean reversion back into the bands. We've got the 25s hovering at 76. But if you go to the weekly, I think this is where it becomes interesting. Purely, and I'll give you some reasoning why. When we look at building the bigger picture, we'll look at the moving averages, we'll look at SR levels, monthly levels, and then obviously I'll bring in market profile. So what I want to do is just really spend the next 20 minutes or so just talking about the Bitcoin price action here. And like I said, the key thing to note here for me is, well, look, let's just ignore the moving averages for now. Okay, let's just holistically look at price from a high time frame perspective. You can see where we've got weakness in terms of price. Where have we rejected from? We've rejected from this previous range high where price was consolidating for several months before we got the breakout, and we saw that range high projection. Okay, if you could take the mid, okay, if this is all one range, all I've done here is just use a range projection, which has kind of given me a marker for the top. Now, did I know this was going to be the top when I initially marked this out back in August 2025? No, I did not. But what it did give me was a point of inflection or invalidation that if we start rejecting from here several times, which we had, because if you look at the monthly time frame here, and as I've pointed out over many, many years and many live streams, that one of the key things that I feel people don't really pay attention to, that really is the wicks on the monthly time frame. Because if you look at the wicks on the monthly time frame, fairly self-evident what happens. You can see sellers are coming to the market. You can see where the market is failing to accept at higher prices. And even on the downside, when you see sellers becoming exhaustive and buyers stepping in to hold the market up, that's often an inflection point. You saw that happen again here in the summer of 2024. But look at this, once again, deep wicks when it comes to the monthly time frame. And then this, the fact that we couldn't find acceptance above 116, we had 1, 2, 3, 4 attempts above 116, and not a single month managed to close above it. 4 months of sideways price action, ranging between 107 to 116. So when you see this, whether it's at the highs, whether it's going to be at the lows here, they generally often give you a fairly decent inflection point in the market to start thinking about, all right, the current trend or the current correction looks to be exhaustive in terms of selling or buying. And that's something that you really want to take note of from a just from a price action perspective. And I think it's a really nice segue, in fact, going on to, if you look into ES, and it's something that I've talked about for the last few months now, that this to me is looking distributive, because again, if we just zoom into price here, and if you just mark out the high of October, during what period have we had acceptance of this level? Okay, you can see this is the October high. Under what circumstances or under what context did we manage to get a close above this level? We haven't. Okay, October high, the high of December, we were traded in December above the level, back below it. January, pushed above it, failure to find acceptance above the level. February, trades above it, rejection. When you see that, again, I'll give you another example here. 1, 2, 3, 4 months of sideways price action, okay, shows you signs of exhaustion or potential local distribution. And I think it's the same here. This is what I've alluded to since this, well, pretty much the end of December, heading into January, February, that I think the market is stalling out. When you go into the weekly time frame, you can now see that shift that we're getting. But what's interesting is, when you bring on the weekly bands for the first time, let me just get rid of this line here. We've just about started to close below the 1221. So what you really want to be watching out for now in terms of downside risk, and I do think there is potential downside risk, given the fact that we see oil prices spiking. Are we going to see further tensions from a geopolitical factor? Is the fact that commodities or energy and oil, you know, the supply chain is being disrupted. So what does that mean in terms of higher fuel prices, in terms of shipping costs, okay, in terms of imports and exports? It's all going to have a knock-on effect on goods and services if there's no resolution anytime soon. And so what does that mean? That could obviously mean that we could see a reaction in inflation. It may or may not happen, but we'll have to wait and see. And what does that mean then for the wider economy and the markets in that respect? But then again, like I said, if it is a risk-off scenario, with a risk-off scenario, that's a great opportunity from a buying perspective, because one, you can probably trade the volatility to the downside, but number two, you're also obviously at the end, once that volatility subsides, if it is event-driven or if it is more structural in terms of selling off, generally when it's event-driven, those events are sharp and fast. When it's more structural, they take time to play out over many, many months in terms of, you know, price trending down, carving out a bottom before you get some form of reversal. But really what's interesting to me here is, for once, we can see, just as per 2025, price is starting to stall and really hovering around the bands before you start getting the dispersion between the bands, the narrowing of the bands before you see price accepting. And we are in a similar regime again from a price structure perspective. Like, we are just hovering around these bands. There's no real attempt to push the market above 7,000. We're not seeing acceptance. And so therefore, I do think there is an element of, look, is it a case of we're going to make one more high? You know, potentially it could happen. I'm not so sure. Are we going to make one more high before we get a correction? Classic up thrust after distribution? Or is this it, that the narrowing of the bands is going to lead to more risk-off scenario, which I think will pick up in terms of velocity and pace to the downside, potentially back into the 6100 level? Wouldn't surprise me. We're at 67. It's only like 700 points away, but still, what does that mean in terms of the wider context of the market? What does it mean for Bitcoin? What does it mean for Ethereum? I'm not necessarily somebody who kind of looks for correlations between ES, NQ, and Bitcoin, but one thing I will say is that if there is risk off in NQ and ES, then I don't see any reason why Bitcoin is just going to kind of go against the trend and just catch a bit. Again, I could be wrong, but I think what it tells me is that there could be an even better opportunity to re-long Bitcoin from the low 60s or 58s if that potential trade setup happens over this next week or two. We'll have to wait and see. But what's interesting for me, you know, from all of these charts is when you look at the daily for me is slightly telling now, because when we had the Trump tariff debacle back in 2025, it was a sharp sell-off and the market caught a bid, a very, very strong, relentless bid. And you can see how that momentum has been tapering off. Okay, you can see the way in which the market dropped. Okay, you could almost mark out a range here at the 6,500 level. That's your range lows, equal lows. Market continues going higher. But again, like I said, there's real failure to get above this October high. And when we've had the shift in structure, if this is the double bottom low and the October high, what can we notice about the market in terms of structure? Okay, that we have been making higher highs, and then we get a lower low, local in this range, into a lower high, into another lower high there, into a new lower low. And the fact that the trend is starting to shift in terms of this range here. So I do think it's quite possible or quite probable that, look, given the fact that we are at the mid-range at this moment in time, I think there's every possibility that as long as price is capped by the bands, I think the pressure is going to continue to remain to the downside, and such that if there are any spikes early in the week or next week or two, given that there's no ceasefire, I think if there's a ceasefire, I'm pretty certain that we'll probably see a spike in price. But if there's any weakness after that, then I think that becomes a selling event down into that 6,500 level. And when you look at NASDAQ as well, I know ES is looking slightly weaker, but again, it's the same picture on the NASDAQ. You can look at the weekly. Again, you can see the pinching of the bands. It's not, I really do think we are probably leaning into some sort of corrective phase. Again, I don't think that's something to be really fearful of. I think it's just, look, whilst the market is potentially going through a phase of risk off, you've just got to be slightly cautious on how aggressive you wish to approach the markets versus, you know, potentially looking for better opportunities to kind of buy the market is what I would say. Okay, and I think it's the same with gold as well. When I look at gold here, yes, the market's caught a bid. This isn't something that I would want to fade. I don't think I'd even attempt to fade this. I've got no indication to be selling this at all, just even from a daily band perspective. Could this be the lower high? It could very well be, but for me, for as long as price is still respecting the daily bands, let alone the weekly or even the 3-day, this isn't something that immediately I want to be selling or looking to short. I think it makes far more sense that should the market show signs of a shift in structure, okay, and then we get a lower high. That for me is a slightly better opportunity. You know, I just think there's every reason why we could see price continue spiking higher. Maybe it makes another push before we get a sharp correction. But it's just, I just think this isn't the market, this isn't something that I would want to be selling just yet. So for that reason, for those who are asking me about selling gold, it's not something that I wish to trade at this moment in time. I think when I look at silver on the other hand, XAG USD, again, this to me looks weaker than gold. If in all honesty, we've had the sharp sell-off. We've probably got a short covering rally. Those who are looking to buy the dip, I think if we start trading now in terms of, again, through the daily bands, which we are under, then I think we eventually slowly rotate and oscillate, maybe within this range from 70 to 96 is the range. This is kind of a no trade zone for me, but I do think that we eventually will oscillate back down to the 70s. The question is whether we get another push up first, you know, whether we get something like this into more of a high time frame, lower high before we get a move back down. That's something that if we take out this high here and we find acceptance back inside, that's probably something that I would look to sell back into the 70 region from the 97, 98. So if we get another push up above 95, 96, 97s, we see exhaustion of buyers, sellers stepping into the market, probably a short covering rally, then I would suspect that this is going to be a classic range to trade from 97 down to 70 for around about 20, 25 points there. Okay, but moving on back to Bitcoin, you know, when I look at the context of ES and NQ, that's my main focus. And I think what's key for me, one thing that I've alluded to here, certainly on the timeline earlier in the week, was that, well, when you trade above the bands, okay, one of the key things that you want to be looking for, what is the shift in terms of a bullish market, or when do I start aggressively looking for longs? Now, when you look at the market, when it goes through these corrective phases, again, the one thing I always talk about is time spent building a base and time spent in terms of dispersion between the bands. You can see how the bands, okay, we dropped, we rallied. Again, many would have assumed that this is bullish. For me, it wasn't, because look at the structure of the bands. This is far more conducive of a reversion because we've taken out this high. We've had 1, 2, almost 3 drives into the low. Look at the time spent in this region from February through to April. That's 2 months of price action. Okay, and the fact that we've claimed back above the bands, compression, then we get the expansion. Okay, in this instance, in terms of where price is, I feel as though we're more in this region here, because if you look at the structure again of the bands, they're still quite wide. There's still a fair amount of dispersion there. We've had a sharpish rally up, took out the previous highs. What do we find? Price sliding back through the bands. That's often a sign of weakness. The question now is that, all right, where are we going from here? If this does obviously still, I mean, fairly straightforward, remain below the bands start compressing and rolling over, I think that opens the floodgates that we potentially trade back into February's low. All right, and that's really all I'm looking for in terms of price action. I've not been trading any of this range whatsoever. It's just not been of any interest to me. I think there's a lot of back and forth chop. There could be an argument that this could be a shift in local structure in terms of this being a higher low, all right, because we've made a higher high. If this is our range high, this is our range low. Is this likely to be a higher low? If it is, then the first thing that I would need to say, which would give me confidence that we're going to go back up to the 80K level, is at least on the daily, you show me that you can find acceptance, not only just back above the bands, okay, and hold, and the bands start compressing. That could be the higher low, and I think then we could say, all right, we're probably in for a move back up to 81, 82K, but it has to get through that 70K level where the bands currently are, 69 to 70K. Now, what I want to show here, what I want to mark out, let's start talking about, you know, levels of confluence. In Q4, I took 123 trades in October, November, December. And in Q1 2026, I've All right, folks, let me know if you're back. Are we back now? Sorry about that. My PC decided to reboot for whatever reason. Not sure why that was, but there you go. I had a feeling that was going to happen on stream today. I've been having this technical issue for the last few weeks. I'm not sure why, but there you go. What can you do? But just give me... Are we back? Can you hear me okay? And audio's coming through fine? Just let me know, please, and we'll continue with the stream. All right, just give me 2 minutes. Let me bring my chart back up again. Just give me 2 seconds. All right, so where were we? So basically, the one thing I wanted to talk about, it stopped at how many trades I took. So basically, I've only taken 6, 7 trades this year, and partly the reason for that is just because there's been a real lack of volatility. You know, since we've had, the drop in November, December, we've only had one significant move down. Everything else has been fairly low volume, and any move up has just been rejected fairly quickly. So when it comes to actual price action, if you really want to keep it simple, I think this is what it comes down to personally for myself, that if we just go to the monthly time frame here, and I think, well, let's just start from the weekly. I get the impression that we are in some sort of regime where we've had this significant drop. We're clearly not going to get a V reversal anytime soon. This has been quite a nasty weekly rejection. And so what does it remind me of? It kind of reminds me of the fact that, look, are we potentially in this type of environment here where, there's going to be a lot. I think the market, what you have to do when the market trades like this is just be very, very patient and look to trade the extremes. Unless you're day trading this as a scalper or an intraday trader, maybe using some sort of market profile of VWAP bands, I really suspect that we're probably going to see a prolonged period, just as this was back in July 2021. This was we had the sell-off 1 week, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, okay? Before we saw price eventually break out, because look at where we were selling into. And again, the key thing to note here is, again, look at the wicks, okay? Buyers are stepping into the market. Sellers come in, market pushes back up. Sellers come in. All right, market gets bought back up. So that for me is a sign of seller exhaustion. Now, what's evidently clear here is that there's clearly been some demand down at that 60K level and again at 63. So it does remind me of this regime here. So I'm not sure how much longer we could be in this range. And I think we will be range bound for quite some time. And again, when you look at the backdrop of SPX and NASDAQ, if they're looking to roll over or correct, by a few hundred handles lower down, what does that mean for Bitcoin? I really don't see a case where Bitcoin is going to go on a big tearing run whilst the market remains, risk off. If you look at the dollar, for instance, the dollar's been catching a decent bit. If you look at oil, which I think is kind of what's been capturing everybody's attention, that's a fairly significant move. It is coming into a level of resistance, but what does resistance mean when it comes to geopolitical conditions? Who knows if this is going to continue going higher? But I think eventually, obviously, as is always the case, once that geopolitical risk can reduce, as oil becomes an easy fade back down again. So that's something that I think you just have to look out for from a risk on perspective. Clearly, when oil is rallying, it's not evidently risk on at all. It's just time for caution. and just let the market play out. Let the market do what it wants to do. I think there's plenty of time in the market, before you can start really thinking about buying opportunities. We're heading into the end of Q1. We're not too far away from the typical sell in May and go away. Are we going to be in for a volatile period during the summertime, or is it going to be a quiet period? But I do lean towards Q3, Q4 becoming very, very interesting from a market and trading perspective. But I think short term, it's just going to be, if you like trading volatility, let's just hope there's an uptick in volatility across all markets, including Bitcoin. So the one thing that I just want to mark out here is, look, I think evidently it's clear. This for me here was my kind of the range level that I'm looking at on Bitcoin, that if we're going to rotate in terms of price action, this range here is really of interest to me. And you can see where we rejected from the other day as well. You take that range high, you take the range lows here, and I think you've got yourself a fairly decent range to think about. Now, the question is, what does price do next? Not only am I looking to trade the possible extremities of this range, but the mid-level is also of interest. But there is another level or two areas that I'm really thinking about, and that is, well, if you look at February's candle here, we've got the February high, which we still haven't traded back up into. That's coming out in around 79.80k, and then we've got February's low. So I really think if you want to keep it absolutely simple, trade less. Everybody talks about being patient. Well, what does being patient mean? Being patient means that you have a strategy that you trade, that you've got a plan that you wish to trade. And I think that, like I said, in Q4, I took over 123 trades. In Q1 of 2026, I've only taken 6 trades just because I'm not interested in trading the market with the lack of volatility unless price comes into my zones. And the two zones that I'm really looking to trade is either a price trading above February's high and we see signs of rejection. That's certainly going to be one area for contention in terms of selling, or alternatively, price coming back into the February lows, and the fact that we get to move into February's low and it's short-lived. Sellers are coming in to sell into the market. There's a real lack of continuation, seller exhaustion. We are seeing absorption at this level. And what do we want to see? We want to see acceptance back inside the range. And I think that's going to be something that we will cover on the next stream in terms of order flow and footprints. But really what I want to talk about today is just context. What are the levels that I'm looking to trade? And again, equally, I'm looking at the 80 to 81, 82k level as being a key zone in terms of resistance, such that if I see a reason that, look, if we don't trade down into this level first, right, and let's just assume for whatever reason, we probably take out this week's low and then we push back up again. If we have something like this where we've left the lows intact, then this becomes more attractive from a selling point. If it's a case where price comes down, takes out February's low, then gets back inside, then we start pushing up, okay? Then this becomes a less of a probability sell for me, because I think we certainly could squeeze higher, and then we'll take it from there. So that's what I think about when it comes into context. Where is price trading? Where is it looking to go? How did it get there? And from which path did it get there from, okay? So again, if we take out the lows and then we go to the highs, then it's probably not something that is a high probability sell. But if we start drifting higher over the coming weeks, this then becomes an attractive sell. And you can probably take it for granted that we're going to see quite a lot of enthusiasm on the timeline and people talking about, oh, did you buy the dip on alts? Did you buy the dip on Bitcoin, and so forth? So, and generally that's often a sign where I think these 4 to 6 week rotations or 4 to 6 week cycles, as I like to call them, is when it gets to weeks 4, 5, and 6 at the end of a rally, in what is a downtrend is just when you want to start being slightly cautious, unless there's a real shift in market dynamics and shift in structure. So coming back to the Bitcoin USDT chart, February's high, February's low is the range that I'm looking to play. Now, let's add further context to this, because right now when you look at price, what does that actually mean? Well, why is Exo pulling out February's high and February's low? It doesn't mean fuck all, really. Could be pulling these levels out of his arse, as far as I'm concerned, right? But this is where we start to add context to the region. So the reason why I'm talking or focusing on this level, because now this is how when I come to planning trades and high probability trades from a swing trading perspective, I look to build a picture. All right, so we can see that we're trading with inside of February's candle, okay? We haven't taken out the high, we haven't taken out the low. I think they are in what you can consider a $22,000 range, very key inflection points in the market. Point number two, when we go to the weekly chart here, you look at the weekly bands, you can see that, all right, this is probably going to come down in the next week or two, but what's key for me is that if we do get a mean reversion back into the 1225 bands, okay, which you can project forward is probably going to be around there, and this is probably going to be around there. If for whatever reason price gravitates back into there, again, it's that 80, 81, 82K level where I become interested as a potential seller, looking for a mean reversion back to the range lows, because I'm flowing with the overall trend. Now that doesn't mean to say that it's going to go significantly lower down. The plan here is, if this is a potential sell opportunity and I'm seeing the reasoning to sell this in terms of price action from an order flow perspective, where sellers, obviously buyers are piling in at these highs, CVD is going up, okay, and potentially open interest is spiking, but price is unable to move. That for me is a sign of absorption from buyers who are no longer able to push price. And then eventually what you often see is when you get late longs piling in at these highs, or late positions opening at these highs, filling all these sell side asks, they're going to puke their positions. That's when you get the delta unwind. So what is a delta unwind? When you get open interest dropping off and you have CVD obviously trading lower down as well, induced by either market participants closing out their positions or getting liquidated, and therefore you get a drop of interest, and that's what causes these fast moves down, okay? As opposed to sellers aggressively selling the market where open interest is going up but CVD is going down. That isn't as a higher probability of a mean reversion play as opposed to open interest is rolling over and CVD is rolling over. That's what gives you these fast moves down back inside the range for a mean reversion, or at least back into the mid-level, all right? So that's two reasons why I'm really interested in this 80 to 81K level. Now let's look at it from a market profile perspective, but just before we do that, let's just look at pure price action. When I look at price on the daily time frame here, what was the last low before we had a significant break lower down? It was this level here, wasn't it? Right? Look at where the last low was, this significant low. The market comes in, takes out all the lows under here, and what does the market do thereafter? Carries on. You get that reaction there, you get the reaction, but then look how aggressively the market sold off. At that point, sellers are stepping into the market, because why could we not get a clean retest of this 80, 81K level? And what has it done? It's essentially left a level of inefficiency behind. You can see that from this low here to there, okay? All this area here, we never really got a clean retest of this low or this low here. You can see the market breaks through the level, sells off significantly, holds this level, sellers are stepping into the market then goes for expansion further lower down. So if we do get a move up again, it all comes, for me, it all aligns back into the 80 to 81, 79, 81, 82, give or take. This zone here is the inefficiency that I'm looking to target, that I think if we trade into here over the next few weeks and we get a reaction from there, or give or take, it's going to be either we don't trade above the level, but we fill in the inefficiency, or we get an over and then a back under, and we see trap buyers, high delta at the highs, then that for me becomes the range, the bigger range to trade, that 80 to 58K range, where at least you can look to take it back to this mid-level of around about 70K. That's going to be the high probability trade. The continuation trade for me is, all right, if the market reacts and we find acceptance, round number two is going to be, okay, now let's take out these lows here, just like we did here. Look at the structure, market, you know, in terms of market, it breaks through the lows here, consolidates, aggressive sell-off. Look at what the market does in a fairly low volatile range. We get the thrust up, look at the move down, and then down again and through the level, right? So that's just something to watch out for, are these lows here. If these lows remain intact over the next week or two, right? And such that even if the market does something like this, it might be of interest depending on what the order flow is. If I see a lot of aggressive selling here being absorbed with a spike up in open interest and CVD coming down, that to me is bad positioning, where this could then fuel the move higher, okay, into something very similar to this, where the market goes up and then it comes back down to take out the lows. After that, we'll see what happens, okay? So just something to contemplate, that this 61K level, 62K level, I think is going to be an area to watch in terms of price and the market giving some form of reaction at these lows here, okay? But the problem that we have at the moment is from a daily perspective, we are under the bands. So again, if the market does hover lower down, I would ideally like to see February's low or equal lows or just stopping short of the February low in terms of contemplating, all right, I've got a clearly defined risk. I think we're going to get a mean reversion back up to fill in that inefficiency there. Now, just give me a second. Let's have a look at things from a market profile perspective. Why that 80, 81, 82K level? Again, if you look at this from a market profile perspective, this here is a 4-week composite from a market profile perspective. For those of you who are not familiar with what a market profile weekly composite is, all it essentially is that I'm taking, excluding this current week, all I'm seeing in terms of market profile, 1 week, okay, another week, and the fourth week. What's happening? Well, if you look at the market, there's value area low and there's value area high. The market is contained inside of the value area low and the value area high for this current period. Okay, these are weekly market profiles. And then again, what do you find? You find once again overlapping value with the previous week. What do you find here once again? A level of overlapping value with the previous week. There's a few ways that there's a few rules and interpretations. Some say that the market has to overlap by 50%, 60%. For me, I don't really give too much concern as to what that percentage of overlap is. For me, as long as there's a clear rotational environment with overlapping price action, that's when I start to merge the profiles together into a composite. So I've just merged 1 week into 2. This is going to get merged into this. Again, if you look at that, you've got overlapping value. This is your value area low, this is your value area high. It overlaps with this value area here. Therefore, I'm going to merge this with this profile here. That's a 3-week composite. Now this 3-week composite, value area low, value area high, merging back into this, okay, because we've got a clear overlap there as well. So let's merge that into there. Now, if you look at price action, one of the things that I tweeted about was the fact that I think that 69, 70K level is going to be key, because if we find that we reject from these highs, I think I tweeted about it on Wednesday or Thursday, that 69, 70K level is going to be key. Why? Because the daily moving averages are there, the 12-25 daily EMAs are there, this is a 4-week composite value area high, okay? And such that we were trading at 71, 72, where we saw, you know, there's a little bit of excitement on the timeline. But like I said, when you're in a downtrend, the chances of breaking out of a range with very little consolidation, for me, 4 weeks worth of price action in a range isn't really a great deal, considering that we've dropped 20, 25K. We fell from 90, 95, 96K all the way down to 58 in a matter of 2-3 weeks. And we've consolidated for 3-4 weeks. So in my opinion, I think the market is still going to continue to trade or remain range bound. And what's happened as a result is, as you can see, once we got acceptance back in the value area high, where are we trading? Straight back into the point of control at 68K. All right. Now, the thing for me is that if we remain here, then I think there's every chance, if you look at where price is, that we come and trade these poor lows here. So that's going to take us to the other side of the composite at that 65K level. And then the problem there is that if the bands are rolling over, the 12 and the 25 daily bands are rolling over, and price is starting to break down, and we start seeing acceptance, this 65K level is going to be massive, okay? Because it's a 4-week composite. The majority of price and time has traded between 65 and 71K. If we see acceptance followed by a rejection, then I think this opens the floodgates that we're going to quickly trade down. And if you look at all these single prints here, into this tail, this is where I think it becomes an interesting zone. That this is February's low, and that's that range that I've been talking about. February's low to February's high. That's the range that I want to trade. I don't want to trade any of this shit in between here. For me, it's going to be at the extremes, because look how little time we spent at this tail. We've had a fair bit of time up here, you know, from a market profile perspective, but let's just focus on the low side. If we come and fill in some of this inefficiency at the lows and we find acceptance, remember the box that I drew earlier on below February's low, this is the zone that I want to see in terms of how the order flow is. Am I seeing aggressive selling? Am I seeing buyers stepping into the market? Or am I seeing aggressive sellers trying to really push the market lower down? And you have to remember, aggressive selling doesn't necessarily mean that shorts are piling in. It can also mean that anybody who's got their stop at 62, 63 are getting stopped out. If you've got a long from 62, 63K and you're getting stopped out at 60, 61K, what are you effectively becoming? You are becoming a seller because you've opened up longs, okay? And now that you're getting stopped out, what are you forced to do? You become a forced seller. So that's what you have to understand. It's not just necessarily shorts are piling in, but it's sellers are piling in. Forced positioning, bad positioning, puking their positions, but it's being absorbed by buyers in the market. And if these buyers are evident and present and they're able to absorb all that aggressive selling, well, guess what? That tells you that the market is ready in terms of value to hold these prices before we can start seeing the market gravitate back to what we believe to be fair value. Okay? It's going to be the point of control. If we just merge this current week with the last 4 weeks, given us a 5-week composite, well, let's just get a kind of an anticipation as to where the point of control is. Well, it's at that 67K level. So you've got a really nice mean reversion trade back up into 67. And then if we can get back above 70K, it opens up the floodgates to trade all the way where? To trade all the way back up into the 80K level. So again, why the 80K level? Why is that such an important level for me? It's simply because of the fact that, well, if you look at price here, see this single print? This is where the market broke down from. And this is that thin inefficiency where we couldn't seem to retest 80, 81K, and the market opened and trades much lower down in terms of a double distribution, okay, week. This is an area of value, but this is a larger area of value. But what's subtle for me is, again, zooming in, let me just get rid of this. Look at these singles here, all right? You can see where price was capped. Price was capped at that 79K level. When I try to get very accurate and very precise with price, it all comes down to which levels am I looking to trade, and then I need to see the reaction on the order flow at that level. That's how I nail my trades, because now that I've identified 79 up to 80, 81K, this is the zone that if price trades into here and we start seeing rejection or we start seeing aggressive buying, unable to push the market higher, guess what? There's a fairly probable chance that the market is going to come in and reject from this level up here, okay? And that's why I've denoted on my chart potential area for shorting if we see an aggressive move up, fueled by short covering and aggressive buyers being absorbed into this region around the single prints. It fills in that inefficiency. What we're looking for then is a reaction from that level. If we get a reaction such that we get a move up, okay, over the next few weeks, and we see high delta, that's going to be the area to fade. Stop placement, you can figure it out yourself, okay? But does that make sense from a market profile, and why I think for me that 80, 81K level is going to be key? Not only is it the February high, not only do we have single prints, not only is it an area of inefficiency, but we've also got the weekly 25 EMA, which, as we've seen in a downtrend, has been a fairly strong area in terms of selling. Every time price mean reverts into the 1225 weekly EMA, and we've had very little consolidation or base building, it often serves as an area that you can probably sell for a trade. Okay, I'm not talking about buying spot Bitcoin. I'm purely focusing on the trading aspect of the market, because I do believe this is a trader's market currently. I think the time to buy spot will also come in due course as well. And I think the lower price goes on Bitcoin, I don't know where the low is going to be, but I think the lower price goes, you've got to really say to yourself, this is value, okay? And I really think Bitcoin is one of those assets where When it comes to buying spot, you buy your spot, you put it in a cold wallet, and then you can focus back on your trading. The whole purpose and the whole reason why I trade Bitcoin and why I short Bitcoin, okay? I don't short Bitcoin just because I want to pay myself. I short Bitcoin because whatever profits I make from shorting Bitcoin, guess what I'm doing? I'm holding onto that stack so I can buy Bitcoin when it's at value. And I do believe that we are, over the next several months likely to head into the market phase where Bitcoin becomes a very, very, very attractive prospect in terms of buying at the market in due course. And so I'm just going to really wrap up on one last thing, and that's essentially, let's just look at the macro view before we end today's stream. From a historical point of view, this is one of my favorite high time frame investment indicators, okay? Haven't always got it right, but like I said, as a trader who's been trading for 10 years, you evolve, you learn from your mistakes. I'm not going to get every high and every low right. That's just the nature of the game. But the one thing I will say is that when you look at the historical context of Bitcoin here, and there's a repeating pattern. Again, this is something that I've talked about, that when we see price remain above the 50 weekly moving average or hover above it, that's all right, it's not too bad. But when we break below it convincingly with acceptance, and when I say acceptance, I'm not talking about, oh, look, we've got 1 week below it. I'm talking about prices holding below the level. What do? We trade very quickly to the 200 weekly moving average. That's Exhibit A, 2015. Exhibit B, 2018. Look at that. We break through the 50 weekly moving average. Underside retest. Look how quickly we move to the 200. That's in 2018. 2019. This, for me, was not a clean, compelling break. When I want to see a clean, compelling break, it has to be not just hovering under the bands, but pushing away. Then an underside retest is fine, whether it wants to or not. Then we get the continuation lower down. In this instance, hovering at the level, that's fine. Above it, but look at what happens once we get below it for a second time. This is failure of this level. Where do we trade? Straight into the 200, into the 300. Fast forward to Exhibit D, 2022. What do we do? Very similar to what we had in terms of price action over here, right? Breaks through the bands, retests, rolls over to the 200. Breaks through the bands, this is compelling. Retest, that's a mean reversion. Where does it go to? 200, into the 300, and even overshoots the 300 into potentially the 400, okay? Not quite the 400. So that was the previous last 4 cycles. That every time we've traded below the 50 weekly moving average, price gravitates eventually or oscillates to the 200, if not the 300. Where are we today? Well, look at price. The minute we start holding the 50, holding the 50, holding the 50, we break. That's convincing enough. And for those of you who followed me for quite some time, my context has been selling the market. But now, look at where we are. Acceleration. The question is, where is the low? I honestly think that if you look at this consolidation here, I'm not saying that we're going to go to 42, 43K, but obviously the bands become interesting. And if you look what happened last cycle, that we overshoot the 300 for several weeks, what if that becomes a buy? I don't know, because we do have a level of support over here as well. But just something to keep an eye on. And one thing I've noticed, okay, I'm not trying to pick a bottom here because I'd rather be reactive than trying to second guess where the bottom is. I don't know where the bottom's going to be, okay? But the one thing that I will say, and I'm waiting to see if it's a repeat pattern, is that every time Bitcoin trades between the 2 to 3 or 400 moving average, it's often value. It's often what is perceived to be value. So again, when do we get there? The question is, do we, first of all, and I think this is how I'm thinking about Bitcoin, is that do we get a move down? And if we get a move down and take out February, again, February's low. Why is this key? Well, February's low is key because look what's right beneath it. It's the 200 weekly moving average. And I think that if we trade into there, we'd probably get a reaction. Okay, and then we might get a mean reversion. After that, we'll have to wait and see what happens. But if we get a prolonged, not price capitulation, but more time capitulation, something like this, where price drops, gets close to the 200, rallies, and then it drops lower down again, this is probably the time capitulation aspect that, you know what, we might get the 300, we might get an overshoot. We might take out the lows of the range that we saw from March 2024 all the way through to October, November before we broke out. What if we trade below that? If we trade below there, then it's fairly straightforward, because what you essentially have, if I just get rid of the bands, you essentially have a level of inefficiency here. Okay, where's your demand zone? This is your demand zone here. This is where the market consolidated before we broke out at the all-time highs, corrected, continuation. So this was a break, consolidation, break. Okay, so rally, base, rally. All right. Now the question is, I'm not sure what's going to happen over the next few weeks, but I've already explained my thoughts, my thought process. But I do think that this does become attractive. The lower down we go, then I'm looking for longs. If we push up higher first, then I'm looking for shorts. And that's all I'm looking to do. I'm not looking to catch every rotation, but there's February's high. We take out February's high, fill in some of that inefficiency, confluent with this SR level here. I think that's setting up for a move lower down into that region here, into the 200, potentially the 300 weekly moving average. All right. Now the one caveat is, I know there's a lot of talk about, yeah, but the RSI is oversold. It doesn't really matter whether the RSI is oversold or not. I'm sure it, you know, may bear some weight for certain systems, but ultimately, you know, when I look at price, when I think about price and I think about time, capitulation, I look at the structure of price here. This to me doesn't look good, okay, from a weekly perspective. And what I love about the 1221, now that I've been trading for nearly 10 years, when I look at this system here, it's really good. I don't have to catch the bottom. I just want to see price oscillating sideways and play the right-hand side of the V, okay? For whatever reason, people obsess with catching the bottom. For me, I'd rather catch the probability of being right and then adding more size on the way up, as opposed to buying Bitcoin here, and then pissing it away and then puking at the lows. All right, that's not how I want to trade my positional plays. If I think Bitcoin is really overextended and there's the severe capitulation, and we see, you know, some form of backwardation, and we see like high climax of selling volume across all markets, then yeah, I'll absolutely be interested, because that's what you want to buy. You want to buy those three sigma moves, high delta moves where volume spikes, relative volume spikes, there's a lot of fear. I think then that becomes really attractive as at least for a mean reversion play. But for now, as it stands, you know, I think it's a question of, right, what do we do for the next few weeks? If I hazard a guess, I would say we're probably going to oscillate between this range, maybe February's low, that's your mid-range. If that's not the mid-range, then that's the range that I'm looking to play, okay? That's all I'm focusing on these areas here. The one exception is, as I've explained, is this here, the February high, which is this level here. The high of February. Confluent with the bands, confluent with the single prints, that's going to be a level that I think if we get a push up for the next few weeks, I'm looking to sell that into a range play back down. Let's see what happens after that. I'm not going to talk about price going down to 51K. We've got all this area to contend with. But like I said, from a market profile perspective, right, if we have price over the next few weeks, if I just merge these profiles again, or even better, let me reset the profiles and just go to the monthly settings, go to the monthly profile, click OK. Look at that. There's a monthly profile. Where is price contained? This was the profile for February. All right, all of February's price action. Where is price being contained? We've come up. Where did we reject from? We reject from this low volume, or this low node here, okay? That LVN. That's where we rejected from. Where has price spent the majority of his time? It's spent the majority of his time in that value area of the previous month, right? This is all value here. So again, if we start getting acceptance below 65K, and if we push below 65 with an undecided rejection, then I think it opens the floodgates that we could potentially go back down to 61, 62K, into where prices spent very little time and buyers were willing to step into the market. That's the area that I'd really love to think about long in the market, or maybe an overshoot of this level and then back inside. Okay, that's what I want to. That's probably the two key levels that I'm looking to trade. Just really keeping it simple. And I believe that's all there is to it, really. Any questions? Yeah, look at this. Just on the daily profile, we've got so many poor lows that we could potentially take out here. If you look at this, this is just a daily profile. It's just, there's a poor low here at 65K. That's going to be key for me. I think that's the monthly value area low. If we take out this poor low here, I think we go very quickly to 63. And then it becomes interesting because, yeah, I think, yeah, we've traded that single print. So, yeah, let's see what happens. That 61, 62K level could come. And if it does come, I'm certainly going to be looking to think about where I can long from that level lower down. All right, the one announcement that I haven't got to make, sorry, just before I end the stream. As many of you know, I don't run a paid service, I don't run a paid group or anything like that. One thing that I will be doing is extending my mentorship, which is in partnership with Prime XBT. All you got to do is just sign up with Prime, deposit a bit of money, make a trade, and you'll get access to the group. This has been extended from March to April, and if you just want to get an insight, what I normally do, unfortunately I've been ill from January to March, that's why I'm extending it through to June. But what we'll be doing is I do weekly market reviews, which is geared towards order flow, footprints, price action. I will be more actively trading now. And obviously there's a mentorship where I talk about everything from trading manual, the process, part 1, part 2, trading psychologies, part 1, part 2, part 3, trading routine, goal setting, risk management, order flow part 2, AMT, volume and market profile, how I use it. And again, I go over examples in the live streams. Not only do I look at trades that I've taken, I also look at trades that I could have taken and give reasoning why and what the strategy, what type of strategy you could trade with clear reasons for execution as well. All right, and then yeah, just further other videos, trading strategy part 1, part 2, how to actually create a trading strategy. Okay, it's something that I've put together myself that I've not really seen anywhere, but really makes you think about how to build a trading strategy that helps you understand your game moving forward. All right, so if anybody's interested, I'll put the Google form up in the description tomorrow, and I'll post a link on Twitter tomorrow as well. Like I said, it's not a paid group, it's just something that I do in my spare time, but it is in partnership with Prime XBT. Apart from that, wishing you all a blessed week ahead. God bless, and it's good to be back on stream, and hopefully I'll be back in a few days' time or next week. Take care. Speak soon. Bye-bye.